Welcome, everybody, to another episode of Moving Markets with Jeffry Dunyon. My name is Jeffry Dunyon, of course. Glad to have you here on this beautiful Monday morning. Today is April the 29th, 2019. As we begin this program today, it's about, it's 8:36, 8:37 my time, so about 10:35, 10:36, 10:37 on the East Coast. I don't think we're like an hour and 58 minutes difference, so I should be smarter than the way I say that. Disruption or disruptive news coming out over the weekend. Things staying pretty mellow in the sense of no big political headlines that are moving things or causing things to move. The politicians were pretty quiet. Geopolitically, of course, I believe there was a synagogue shooting. Sad again. A couple people passed away from that, but and nothing like the one a week ago, or a little over a week ago on Easter weekend. And not that one tragedy is more horrible than another tragedy, but in terms of the number of losses, significantly bigger a week ago. But other than that, and I don't mean to be too casual or too callous about that, things have been pretty calm. The big news of the weekend had nothing to do with politics. It is not one of those things that you might think normally has a lot to do with the stock market and moving the markets, but the dominant news over the weekend was the Avengers movie and the absolute domination the absolute domination in the box offices for the Avengers movie. I think I read something that said that 90% of all movie tickets that were sold over the weekend were Avenger tickets. 90%. Think about that. I know there were some theaters around where I live. And by the way, I took my whole family to the movie. We went out and saw it on Saturday. Loved it. If you're a fan of the Marvel comic stuff, if you're a fan of the Avengers, you got to love the movie. One of my daughters came home really upset because of, and I'm not going to give any spoiler alerts, but because of a couple of things that happened with some of the characters in the movie, she was really upset and bothered by it. But later on Sunday, we went and saw it Saturday morning. Later on Sunday, she admitted it was a really good movie. She just didn't like how some things turned out. But she had to admit that it was a really good movie. But it absolutely dominated. I think 1.2 billion. Just incredible when you think of the money that this franchise has brought in, and Disney and the domination Disney is now having in that space. Disney stock, when we were off the air for a little while, for a few weeks, we didn't have the conversation about the huge rise in the price of Disney stock over that time period. And a lot of what it was, it started when Disney did their Investors Day, and they made the official announcement. We've known this was coming for a while. It's not something that they just decided to do, but they made the official announcement regarding their streaming service, which I think is going to launch on November 12th. And people were pleasantly surprised at what the price of the service is going to be. I think Disney said they're going to price it at $6.99. I think my Netflix now costs me $15.99. Now I have the package that allows me to put it on several different devices. So if I'm watching something and I've got the Netflix app on my Apple TV in my office, I could have some other family member somewhere in the house watching on their iPad or watching on a television somewhere. So, you pay more to be able to have that flexibility where multiple people on your Netflix account can be watching at the same time. But $16 for Netflix right now. And, Disney's announcing a service that's only going to cost $7. There's going to be, I haven't seen it start yet, or maybe I've just seen it barely starting, because I haven't seen it hasn't dominated headlines. It hasn't been a real big thing, but you're going to have this debate really soon about how many streaming services do you want, and how are people going to start packaging those streaming services together? And here's what I mean specifically by that. And I think this is relative to Disney stock and kind of to some future market stuff to begin with. Before I get up, let me come back to Disney. We call the show Moving Markets. All the major indexes are up a little bit today, but we're talking a very little bit. The Dow is up 14 points, 15 points. NASDAQ up about 13, S&P up 4 and some change. Those are relatively flat movements, but everything is to the upside. You've got some huge companies that are reporting earnings this week. Alphabet, which is the parent company of Google, reports after the market closes today. You've got Apple reports tomorrow. You've got Chevron and ExxonMobil both report, two of the biggest energy companies, oil companies in the world. These are not as big a companies, but these are companies that are relative to my students. You've got AMD, which is Advanced Micro Devices. You've got Under Armour, the biggest, I believe, the biggest competitor for Nike. You've got First Solar, the only clean energy stock that I have in my portfolio and invest in. They all report their earnings this week. Monster Beverages, we have some stock in Monster Beverages, and they're going to report. Several of these reports, I think Under Armour, First Solar, Monster, they all report on the 2nd. Apple reports tomorrow after the market closes. Wednesday is going to be potentially a big day. Tomorrow could be a big day too. Alphabet, Google, parent company of Google, they when they report tonight after the market closes, they're a big influencer on the market. They could push things really high or really low tomorrow, depending on what they do. But in addition to that, you had some more economic data released this morning. Consumer spending being the big one. Consumer spending up almost 1%. I think it was 0.9%. Now that doesn't sound like a lot. We hear that number and you think 0.9%, less than 1%. That's not that big a deal. Put it in perspective. You know, if consumer spending rose 1%, let's say consumer spending rose 0.5% every month. At the end of the year, you've got 6 months increase in consumer spending. Consumer spending is responsible, I think, for 2/3 of the gross domestic product. If you've got 2/3 of the GDP moving up 6% on the year, you're getting GDP growth without the other 1/3 of what's going to go on. You've got GDP growth that's now 2% or more. No, I'm sorry, 4% based just on that. Just 2/3 of a 6% move up. What I mean by that is 6% on the year, but it represents 2/3 of the economy. That's a big move. 4% GDP in a year. We haven't seen 4% GDP in a long time. During 8 torturous, horrific years of the previous administration, our economy was dead flat. I remember Barack Obama. It was at some speech or it was at some interview or something that he was doing when we'd had several months in a row, GDP numbers, several quarters in a row were coming in, give or take 0.5% to 1%, or give or take a fraction of a percent. Sorry, give or take a fraction of a percent. They were coming in right around 2%. They were fractionally lower, fractionally higher than 2% GDP. And we were told that that's the new normal. We were told by a sitting president at that time that you can't wave a magic wand and get better GDP numbers than that. You can't, this is good. What he tried to sell us, the crap that he tried to sell us, was that we should be happy for 2% because in the world the way it is nowadays, you're never going to get better than that. Well, along comes Donald Trump, and even if you hate his personality, you got to be a blind, deaf, mute idiot. And I don't mean idiot to say that people that are blind, deaf, and mute fit that category. You've got to be blind, deaf, mute, and a total moron to not recognize that his economic policies have been good for this country. You can argue it any way you want. You can spin it any way you want. And it's a fantasy if you believe otherwise. You're living in la la land, and there may be little or no hope for you. The reality is Donald Trump comes along and just through corporate tax cuts and deregulation. And for those of you that don't understand government regulation, you've got, I don't know how many dozens of government agencies that all want a little piece of what's going on. They all, whether it's actual money that they want or whether it's influence they want. They might want money from the form of requiring some ridiculous set of licenses or permits or something that you have to have for the type of business that you're doing. If it's wanting power, it's that they don't want you to do anything without several committee meetings at a high government level and approval on different things. Even if they're not bringing in money, they want the power that comes with that type of thing. Government over-regulation. Now, I'm not one of these people who will tell you, I'm not libertarian. I don't think that all government regulation is a bad thing. I promise we'll get back to Disney in just a second. I've got one of the people on live with me typing in probably 4 or 5 times now. What about Disney? I'll get back to Disney, I promise. You've got all these different government regulations, and over-regulation by the government stifles business. It makes it more difficult to do business. When you've got a company, let me give you one example. Let's say you're a building company, and let's say you're in commercial building. You're going to build medium to large office buildings, and maybe get up to the skyscraper level in some of these bigger cities. And you make money as a company when you secure a piece of property. When you get the funding to build a building, you've got to have companies that are going to occupy that building. Some of them have to come in advance and pay to occupy part of that building, or maybe they're paying for the whole thing. Maybe you're building a small office building for a company, and they're going to occupy the whole thing, but you've got the contract to build it. So you make your profit when you build that building efficiently. Meaning you don't pay. You don't. I'm not suggesting that you cut corners and you skimp on things, but you want to get the building up as quickly as possible, as long as you can do it safely, as long as you can build it to the right specifications, as long as you can build it with quality that you want and the quality that you're known for. You want to keep your labor costs down by not having to hire too many people. There's a sweet spot. There's this Goldilocks effect. You don't want too few people. You don't want too many people. You want to find that spot that's just right. There's models and formulas for these companies that tell them where that sweet spot is. If we can get the building done in this amount of time for this amount of money, here's approximately what our labor costs will be. Here's approximately what our material costs will be. Here's the profit we're going to make on the business, or on this project. So you get all of that in place, and companies have to bid. They have to come in with a competitive bid to get this business. There might be 5 or 6 builders that want to put up this office building for this company, and this company is going to go with the bid that they think is the best deal. It may not be the lowest price bid. It's probably not going to be the highest price bid, but it's going to be the one that they think is going to produce them the best building at the best cost. Now enter the government. Okay, bring the government in now. Now the government starts saying, well, there was a mosquito that used to breed in this land, and we're worried about that mosquito going extinct. So the EPA, you're going to have to do a 3-year environmental impact study to determine whether you're going to wipe out this species of mosquito. And you cannot get the building permit to do this until that's done. Okay, now your project is delayed. Your entire pricing model is just blown. A lot of big companies have to build in for these types of things to happen. But there's added costs now. Let's say a company knows that they're going to have to deal with the EPA, and they know they're going to have to jump through all these hoops. There's now an added cost to do that. They've got to have a separate team of lawyers or additional lawyers just to navigate these processes with the EPA. Now you get some other local or city, local, county government that comes in and says, well, you want the building to be like this, but we've got rules in place that say it can't be anything bigger than this, or it can't be taller than this, or you can't have it this tall and then have this communications antenna or satellite dish on the roof because it's unsightly. It doesn't look the way we want it to look for our neighborhood. So you get that in the way. And then you get other government agencies that say, well, you've got to meet this certain standard in the building material, and you get some other government agency that comes in and says, you've got to have this different type of water pressure system than what you had because this one, we don't like it. And oftentimes, there are some times when there is some legitimacy behind what they're doing. But oftentimes it's a group of bureaucrats that don't know the industry, they don't know the business, they don't know free market capitalism, they don't know how the economy works, but they sit around in their committee meetings and they dream this crap up. They come up with something to make themselves feel relevant, and they get overly involved and they overly regulate things. Now, I've started to say a few minutes ago, I'm not opposed to some government regulation. You cannot let companies violate laws that are important to society. You cannot let people manipulate markets. You cannot let them break rules that could be harmful to individuals, physically harmful to individuals. There may be some of those standards that are in place to keep a building from collapsing in on itself in a mild earthquake. I don't want those kind of rules violated. I'm okay with some government regulation saying, look, there are some certain things that you have to do, and there's some common sense behind them, something we're lacking in our government. But when you over-regulate, everything costs more money. It becomes harder for companies to profit. Enter Donald Trump, and one of the first things he did that he did not need major congressional approval for, thank heavens, because he's got a Congress, Democrat and Republican, that want to fight him because they don't like his personality. So you get him coming in there and he starts to deregulate. He just starts to get rid of some of these idiotic, asinine regulations. I mean, this guy has gotten rid of more regulations than 10 presidents before him put in place. Thank heavens. Because it has freed up a company's ability to not have to waste all that money just on navigating all the unnecessary regulations. You combine that with corporate tax cuts, and of course you're going to have a booming economy. And unfortunately, we've got politicians that want to undo that. So you got things humming along, and in a very nice way. And then you get these numbers that show consumer spending is up, and you see that GDP numbers came in last week at 3.2%. We were told by Obama that the new norm was 2%. He said no one can wave a magic wand and instantly create a bunch of manufacturing jobs. Trump has created more new has been part of the process. Like, you can't say Trump created the job. Trump's policies have opened the door for the creation of more manufacturing jobs than we've seen in a couple of decades. Say what you want about his personality and beat up on him as much as you want in terms of his character and some of the stuff he does, but the guy's getting the job done. And if you want to go back to the new normal of 2% GDP, lowering wages, more unemployment, lower labor participation, if you want to go back to all of that, then go ahead and sit on your moral high horse and say, well, he's a bad person, so I'm going to vote for a Democrat to take his place. Yeah, you're a jackass if you do that. I'm sorry. You're an idiot, and you don't love your country, and you don't love economic prosperity if you just want to vote him out of office because you don't like his personality and you believe some of the garbage that the news says about him. All right, enough of that. Let me go back around to Disney. Disney had that huge breakout on their new movie stuff. They got an analyst upgrade today by JP Morgan suggesting the stock price should be targeted around $150 a share. They're trading a little below $140 a share right now today. They're down a little bit today, and I think even though the numbers that came out were really, really impressive for the Avengers movie this week, I think they're the numbers that were expected. I don't think those numbers blew out the expectation. There was a lot of hype going into the weekend. I heard the number going into the weekend. This was about last week on Wednesday or Thursday. I heard a number of 1.2 billion is what they expected to bring in box office ticket sales. And then I heard yesterday that they brought in a little, like right around 1.2 billion. So the fact that it was a neutral number from the standpoint of what analysts expected, I think has a little bit of a sell-off in the price of the stock today. Nothing to worry about. I think Disney will go up to 150. I think because of their streaming service that they're introducing now, I think because of some of the other stuff going on at Disney, they're starting to become valued more similar to a tech company like an Apple or a Netflix or an Amazon, and less like an amusement park / movie company or entertainment company. I think that valuation, that mindset of the valuation is going to propel them. I think without a stock split, I think you could see Disney over the next several years. I don't think this is going to happen in a year or even two, but over the next several years, I think you could see Disney be a $300 a share stock, barring any stock splits. So I invest in Disney. I invest in Disney. One of my favorite stories ever is when I was starting to trade the markets very actively, when I was starting to teach people some of the strategies that were working for me, and when I was early on in safe option strategies. My kids were still very young, and I was trying to explain to them some basics about owning stock and how a company splits their company into shares of stock, and you can own those shares. And I told my kids that we own some shares of Disney, and we still to this day own some shares of Disney. Full disclosure, I own some shares of Disney. But we were at Disneyland Park one time. We were actually there. My daughter, who at the time must have been 8 or 9 years old, we were standing in line for a ride, and we had some strangers in front of us, another young family like ours. We struck up some conversation with them, and somehow the conversation turned to the topic of the kind of money that Disney must be bringing in when it's crowded like this, and what the ticket cost is per person. And we were trying to estimate how much cash they were bringing in one day, just on ticket sales, let alone all the merchandise that's bought in the park each day. And I said, yeah, it gets expensive to bring a family like this to Disneyland. And my awesome little 8-9-year-old daughter, she said, and she's saying this to the lady that we were talking about. She says, it's okay. We own the company, so it's all right. And I thought, okay, well, we don't own the company. We own a little teeny tiny fractional piece of the company, but I still thought it was cute that she had that mindset. All right, folks, 20 minutes after we start, the Dow is still up, the NASDAQ is still up, the S&P is up. When it's this early in the morning in the trading session, that's good news, because in 20, 30 minutes, things can turn and go on their head. But now you are up to date on what is moving markets today. Hope everybody has a great day, and can't wait to see you back tomorrow. Bye-bye.